In this video, I'll break down 4 top stocks to consider buying right now and stay to the end. The last one is up over 1,700%. I'll use Tykr for each so we don't have to spend a lot of time. Fortunately, Tykr does a lot of the heavy lifting. But what I'll do first is kind of break down what does the company do, and then we'll look at what does Tykr say with each. So the first stock on the list is Abercrombie Fitch. If you don't know this brand, well then you didn't grow up in the late 90s and early 2000s. It was like the hot brand at the time. Ever since then, I think it was closer to the late 2000s, they nearly went out of business. But since, they've had a resurgence. Apparently, the 90s is back in trend. So if you don't know a lot about the business, what I do first, going into Tykr, I'll go over to the details tab. You can read a little snippet of text that talks about what the company does. And then you can scroll down, see some of the highlights of the business. And then I like to go to the website. You can see here the logo, and then of course some of the apparel. Now, I don't love apparel companies. The reason is you can pretty much find a manufacturer overseas, slap on a logo, and start selling t-shirts for 20 bucks. This brand here, they already have relationships from when the company started decades ago. So they really just rekindled those relationships with distributors and have said, hey, we've got customers that want our products. Can you start selling them again? I know it's not as easy as 1, 2, 3, but they already have a brand in place, a brand moat. It just happens to have a resurgence now. So good for Abercrombie. But I was really surprised when I saw these numbers in Tykr. So check this out. On the Tykr rating page, and this is where I start if I truly want to know if a business is a good business to buy or sell. This page really rolls it up for you in seconds. You can understand, hey, is this stock actually good or bad? All right, so at the top, you can see this stock is on sale. Stocks in Tykr, if you don't already know, they're on sale, watch, or overpriced. Only about 15% of stocks in the stock market are on sale. That's actually pretty hard to achieve. Then you have the score. The higher the score, the safer the investment. In this case, Abercrombie Fitch is 78. That's really good. And then over here, I look at the margin of safety. The higher the margin of safety, the higher potential returns you can make. So you can see here, they're at 80%. That's really good. Share price is 138, upside potential of 695. So everything is looking outstanding right off the bat. Sometimes what I'd like to do is go a step further. You don't have to do this, but I'd like to look at the financials tab. The score and the margin of safety and that summary, they're all driven by the financials. We don't look at anything fancy like charts and graphs and PDE ratio or anything like that. It's really simple numbers. This is all inspired by Warren Buffett, Charlie Munger, and Phil Town. You want to look at things like revenue, net income, EPS, free cash flow, assets, liabilities, debts, and equity. The basic fundamentals of a business. And if you can analyze those correctly, you can find out if a stock is good or bad. Well, Tykr does that for you and rolls it up to that summary, score, and margin of safety. But anyway, let's take a closer look at that EPS. And what I like to do is go here, then flip to quarterly, and let's see if it's increasing quarter over quarter, because that's what large institutions look for. They actually look for 2 things more than anything else. That's that EPS increasing quarter over quarter. EPS is just net income divided by outstanding shares. Long story short, it's the profits of the company. In other words, are you running a company that's increasing profits every quarter? If so, that's great. We'll invest more. All right, so looking over here, you can see it fell off a little bit on the EPS, but overall, the last 4 quarters are much better than anything else in the past. So this tells us this stock is moving in the right direction. This is the key driver here to that margin of safety we looked at over here. So if you ever wonder how we calculate that, it's that EPS growth rate. And of course, if you're interested, our calculations are open source. So you can go to tykr.com. You can go to education and then calculations. You can actually read our calculations. And if you really like, you can go create your own version of Tykr. At the end of the day, we just want you buying and selling stocks on your own with confidence. All right, so going back to Tykr, we did check the financials. They're looking great. Then what I like to do is look at that earnings calendar. When businesses have their estimate and then they have the reported and then they beat the estimate, that's another good indicator for institutions to say, hey, I'm going to buy more. All right, so check this out. Their last miss was February of 23. And they beat, look at this, 880%. That's crazy. Then 547, then 55%. It kind of dropped off a little bit, but still, it's consistently beating estimates. Now, the last thing I look at to really determine if a stock is a good buy or sell is going back to that rating tab in the very middle. We have the 4M confidence booster. I'll keep this really short and sweet. The 4M's, really inspired by Warren Buffett, Charlie Munger, and Bill Town. Well, that first M is the math part of investing. That's what we really covered with that summary, score, and margin of safety. Then you have the meaning. That's that second M. The meaning of the business is how a business makes money, how many revenue streams the business has, and how scalable those revenue streams are. Then you have the moat. That's how a business stacks up against other businesses in the same sector and industry. And then that last M is the management. That's the track record of the CEO. Now, doing research on all four could take you hours, if not days. We use OpenAI connected to Tykr, which does it in seconds, so you don't have to do the homework. So in the middle, you can see this is an 87. If you can get close to 80 or higher, that's a really strong investment. So in this case, I was shocked when I saw Abercrombie Fitch is back. They're not only back, but they're actually doing very well. So at the end of the day, I was surprised here. This is a stock worth buying. Of course, only buy and sell if it aligns with your own personal investment goals. The big question is it a great long-term investment over the next 3, 5, 7 years? I don't know about that because apparel can go in and out of trend overnight. But if you want to kind of play around with an apparel stock, this is one of the best I've seen in the market. All right, so moving on to the second stock. That would be Napco Security. Here we go. It's ticker symbol NSSC. And like we did before, we'll go to details. I'll just jump right down to the website. Here's their logo. What I like to do sometimes is go to like a products or services tab to understand what the business does. This is a pretty straightforward business. They sell alarm systems for residential and commercial. Most commercial properties, especially in bigger cities, they have security systems or they need security systems. So that's an in-demand thing. And then residential, I am seeing more people, setting up security systems with their homes, not just individual homes, but think of like condo complexes or multi-unit apartment complexes that could be like, we're talking like 100 units, 500 units, the list goes on. Usually they have security systems. So Napco's really in the right place at the right time. And let's dive right into Tykr. So this stock is watched. It's not on sale. Doesn't mean it's a bad business, but I'll get into why this is one of the four I'm talking about today. So look at this. The score is 95 out of 100. Getting close to 100 it's very difficult. Like in most cases, if you run a filter in Tykr out of the 40,000 some stocks we have in the platform, if you filter by 100, like how many stocks have a score of 100 out of 100, it's like you might get like 20 or less. In this case, 95, that's impressive. Really strong financials. Why it's not on sale is because this margin of safety is less than 50%. If you can get a score at 50 or higher and a margin of safety of 50% or higher, then you have yourself an on-sale stock. In this case, it's 17%, still some upside potential. You can see the share price at 47, fair value at 57, so it's still pretty good, but we could see that a touch higher. Let's keep going here. Let's go to that financials tab, go down to EPS, and you can see here it's a nice steady increase on the profits. It's not that steeper incline. If we saw a little steeper incline, it'd probably be a 50% or more margin of safety, but still, this is a good sign. If I'm in the boardroom and I'm one of the C-level executives and I'm reporting to the board saying, hey, we're increasing profits quarter over quarter, that's what they want to hear. When they start hearing something like, we missed the last 2 quarters or 3 quarters, that's a problem. So this is really positive. Again, it would be a higher margin of safety if we saw a steeper incline, but this is still all right. Let's keep going here. We'll go to the earnings calendar. And in this case, look at this. Their last miss was in 2022. Then they've been really consistent, 14%. 81%, that's solid, 30%, 64%, 52%. That right there gives institutions more confidence to buy more shares. So jumping back to the middle, we'll go right to the last metric I pay attention to, which is that 4M. Look at this, 90 out of 100. I was searching around last week just because I like to look for hidden gems, and this one kind of came across my radar, is actually the 4M that popped up. I was like, 90? If you can get above 80, again, that's really hard to do. 90 is like, wow, all 4Ms are really checking out. So this stock is really running on all cylinders. And then if you scroll down, check this out, 192% return over the last 5 years. I didn't do this on Abercrombie, but let's go back. I'll show you that one real quick just for comparison purposes. Back to ANF. This one is up 712% over 5 years. For context, the S&P 500 is about 80%. So I like to set my charts. You can set them to, in your notifications and settings, you can set it to whatever duration you want. I like 5 year because it gives me a good snapshot of like, hey, is this beating the market by a little, by a lot? Is it not even touching the market? Abercrombie 712, back to Napco. We can see here the 192. So definitely beating the market there. It's not as high as Abercrombie, but I do like Napco a little more, even though the returns aren't as big. I find it more of a stickier business. Again, apparel can go in and out of fashion so quickly. Security systems, on the other hand, that's more of a need, not a want. So this one here, this is worth taking a look at. All right, let's move on to number 3, which is Modine. All right, this is a manufacturing company in the HVAC industry, heating, ventilation, and air conditioning. They're actually located pretty close to my home they're in Racine, Wisconsin. I'm just outside of Milwaukee. But what they do is, let's go ahead, check out the website, go to details, then down to Modine. I like to go to services, or in this case, markets, gives us a better idea of what they're doing. So commercial electric vehicles, data centers, think of like heating and ventilation for data centers. You can't just have them in a closed area because they get so hot. You need ventilation, otherwise you got a problem where your server farms are going down. They also have off-highway. I looked at this. This is like large manufacturing equipment, and we'll actually click on that. You can see what kind of equipment we're dealing with here. Yeah, you need some kind of cooling systems, ventilation systems in a vehicle that size. That makes sense. Go back to markets. They got refrigeration. That's another great industry to be in. Then they have commercial vehicles and automotive. So that really solid diversification there. A lot of revenue streams in this business. Not a glamorous, sexy business, but let's continue. Let's take a look at the numbers here and show you why I'm excited about this one. All right, so Tykr rating, on sale stock, 78 out of 100. Really strong financials there. And then another one, 80% margin of safety. Share price is 114. Fair value, 575. That's outstanding. Let's go a step further. We'll check out that financials tab. Go to EPS. You can see the quarterly. They had a nice spike there in what looks like March of 23, then kind of leveled off. But if you look at the previous quarters rolling up to years, still doing a lot better. So that's why that 80% margin of safety is in play. Their profits are very impressive compared to most quarters in the past. All right, then let's jump to the earnings calendar. We can see the last miss was 21, actually November of 21, and then it's been consistent ever since. That's really impressive. Now let's go back to the Tykr rating, dead center here. 81 on that 4M. We've got another one that's at or above 80, which is outstanding. And then down below, look at this. 1,000% return over the last 5 years. Again, S&P, about 80%. But this is beating the market by a long shot. Jumping back to the business, what I'm thinking about is this company might be selling their products to, I'm thinking about the data center play. That makes huge sense. I think about EVs. I think about, commercial expansion, more companies building more offices. You need, sophisticated heating, ventilation, air conditioning. They even focus on air purification. The whole green movement is hot as well. That's not their primary revenue stream, but they are really in a good spot. So this one here popped on my radar. Very impressive financials. Good on Modine. One to maybe throw on your watch list or portfolio. All right, now as mentioned in the beginning, this next stock here is up 1,700%. This is Weatherford International. Their ticker symbol is WFRD. All right, and then we'll go to their website. I'd like to go to details. I was skimming through this section here. An energy services company provides equipment and services for drilling, evaluation, completion, production, intervention of oil, geothermal, and natural gas wells worldwide. All right, so think of it, they're in the oil industry. Let's go ahead, click on their website. All right, so in this case, I'll go to their website. I'm looking at their menu, service, products and services, drilling, evaluation. This gives you a nice overview. What are they doing? Kind of like what I summarized there on the Tykr site. What do you think of drilling is what I really think of. All right, so we know green is a thing, but it's not really the market yet. Oil still has its place, and a company like this, they will continue to prosper as long as, a lot of homes and buildings and a lot of stuff needs oil to operate. So, all right, let's dive into the financials. This stock is also on sale, 83 on the score. Margin of safety in this case, 79%. Share price at 104, fair value at 495. Let's go to the financials tab. Go down to EPS. In this case, you can see the numbers, the profitability is not as high, which is okay. We pay more attention to the difference from quarter to quarter. In this case, it's pretty flat, but you can see here it's still better than previous quarters. In fact, looks like back in 21, this company was consistently not profitable. When a company flips from not profitable to profitable, that's a really good sign. Like when you find those inflection points, that can be a good opportunity to get in, make some decent returns. Not every time, there's no guarantee there, but that's really a good sign. Institutions look at that, and when one quarter hits and it's profitable, that's like, okay, you have my curiosity, and you get 2 quarters. All right, we move from curiosity to now you have my attention. In this case, they are moving in the right direction, slow but surely, which is good. Now let's jump to earnings calendar. In this case, you can see they had a few misses, but it's not consistent. When you run into a situation where you see a company that's missing those earnings reports over and over, that can be a red flag. If it's just one miss, doesn't mean it's the end of the world for the business. But when it's 2, 3, that's when it's like, okay, if I'm investing, I want to make sure I sell, but for a profit. We teach that in our onboarding education is when you sell a stock, try to make sure you sell for profit. That's that rule 1 investing. Thank you, Warren Buffett. Rule 1, don't lose money. Rule 2, don't forget rule 1. So as we teach people at Tykr, remember, try to sell for a profit. So in this case, they did have a miss back in July of 23, looks like 8%, then popped back up at 36%, looking good, then 39, then 4, then they had a miss of 4. I don't think it really took a big hit on this stock. If we go back to this page here, you can see, like I said, up 1,700%. That's incredible. And let's go to the 3-month, just get a closer look here. Yep, we started seeing the pullback around August of 24. I know that's really the market pulling everything down, probably not the stock. Let's take a look at, when was that earnings? It was July, so July 22nd. That didn't even impact. If we go back to share price, we'll go back to 3-month again. Didn't really make a big impact at that point. Yeah, this is really that pullback in the market. So that's a good sign. I like to see that when institutions don't freak out, keep moving forward like it's just another Tuesday. We're good. Overall, those are 4 top stocks to take a look at. I would love to hear what your favorite is. And if you have another stock you want me to review, please leave a comment down below. If you like this video, please hit that like button. If you want to see more videos like it, please hit that subscribe button. And if you're interested, you can invest with Tykr. You can simply join for free. Thanks for checking out this video. We'll see you in the next one. Bye for now.